My goodness, welcome everybody to Selecting an Option Strategy. This has been a wild day in the market, especially the last hour if you've been watching intently. But I'm happy to see you here as we talk about selecting an option strategy, because it can be very confusing about, what to consider, what things are most important as we're identifying a particular strategy. Now, today we're going to address 3 questions that you guys submitted to the survey last week. You did such a fabulous job. Told me some of the things you were concerned about, some of the things you wanted to see, and we're going to be able to take the opportunity to cover as many as we can, but I know we'll do at least 3. Okay. In addition to following up on our trades and putting on some new example trades. Now, I am joined in the chat, I believe, by Cameron May. Cameron's here today. I was with Cameron earlier. Now he's with me. Appreciate Cameron being in the chat. He's here to help answer any questions maybe that I can't get to. Or possibly maybe I don't see, which hopefully never is the case, but you never know. In any case, if you have the questions, chat those in now. Those of you that are listening to this on the recording, because I know lots of you do, when you have a question, go ahead and type it in to the comments section of YouTube, because I go back and look at those every day and I get your questions answered as well. So feel free to do that. Now, I hope you're following us on X. You hear us say this all the time, but I really do hope you are following us. I'm Connie Hill, CS. Cameron is Cameron May, CS. We'll post different educational content throughout the day. We'll follow up on something I posted a little earlier today about where the SPX was, and we'll see if it worked out or not. Let's go through our disclosures, and then we will get into our agenda for the day. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be considered educational and informational. Do not consider it a recommendation of any sort. We will be using the Paper Money software application. It's wonderful for educational purposes and practicing purposes. So take advantage of that paper side that you have. Investing involves risk, including loss of principal. Past performance of any security or strategy does not guarantee future results or success. Short options may be assigned any time, regardless of the in-the-money amount. An in-the-money option has a higher risk of being assigned early. That is one thing that's different in paper money than in your live account. Paper money will not assign you early. So we like to warn you to not get a false sense of security just because it never has happened to you in paper, because it certainly can happen to you in your live account. All right. Going to talk about our events that we have coming up. And we've got Scottsdale this weekend. We've got Chicago, which is an advanced options strategy workshop. We don't do those as frequently as we do the technical analysis and the options. So if you're a little bit more advanced trader, that one might pique your interest. And then in April, we'll be going to Detroit for a technical analysis and options. Now, you don't have to attend both days. There's only one day you can attend, no problem. Just register for that particular day. All right. Sign up as soon as you can because they do fill up. All right. We always want to take a look at our market conditions, see what's been happening. Certainly we want to do that today. Then we're going to talk about maybe some of the different option strategies that we might consider. And we're going to look at some examples on the platform. And we will be looking at several examples here today. Let's go out to Thinkorswim. Let's go out to our charts. And here's the SPX, and it's kind of in an interesting position. Now, earlier today, it came down, and I'm going to leave all the lines up I have because we're going to use them. Came down, touched the 200-day moving average, long-term moving average. Typically, we don't like to see things break a 200-day moving average. If it does, then we think, man, there could be some more downside to it if it doesn't bounce there. Came down here, almost touched it, okay, and then started to run back up. Now, something that I posted about to say, hey, let's see if this actually happens, is I said we have a lot of 3 different ports of support in this area, and I'm just going to kind of highlight it to you here. So one area of support would be the 200-day moving average. A second area of support is where we had some support back here at about 56.98-ish. Okay, maybe that would act as support if it went through the 200 a little bit. And then the last one was our Fibonacci that we have drawn on here. It's the one that are kind of in these mint green lines. And it was just below that support. This 38.2% area was just a little bit below there. And so I was like looking at it earlier thinking, are we going to get a bounce here? Because we have three pretty decent areas of support. And then if you've been paying attention to the market, you know that we rallied up. At one point we had a nice, I don't know if we, yeah, I guess we did go positive here a little bit over yesterday's lows, or yesterday's close rather. So we were up a little bit, and then maybe like the last 20 minutes, 25 minutes, market began selling off. So instead of ending up here with a hammer candle, which typically means potential reversal, we have something that more than that says volatility, right? Because bears pushed it clear down to here, bulls ran it up, and then the bulls actually ran it up a little bit higher. Then towards the end of the day, the bears pushed it back down. Anytime we have some longer shadows on candles, it's an indication of volatility because of where the stock ran to, or in this case, the SPX, and where different market conditions pushed it back to. Okay, so we saw quite a bit of that today. Let's see where the VIX ended up. You know, it was up earlier, and then so let's get just that on there. Was up quite a bit higher. In fact, we've had some higher areas up here, 22, 23. It was approaching that yesterday, and today went shooting through there. And then as the day wore on, it started to pull back. We even had a red candle on there at one point as the volatility dropped until just this last little bit of closing where it started running back up. So yeah, we've got real volatile market conditions. We don't necessarily have a verified pullback, right? On the X, it kind of ended up, let's get NDX up. It kind of ended up being more, gee, let's see what's going on here, right? Was it some support areas, and they could still continue to support the market tomorrow. We'll see. NASDAQ, at one point, it was clear up here. It was showing a nice positive for the day. Looks like where it ended was down maybe about 0.36%. So I haven't checked the other indices, the Dow, the Russell 2000, but I believe they closed lower as well because that's kind of what they struggled more during the day getting up. All right. So we've got the table set with these kind of circumstances. Let's come back here and talk about maybe what strategies. Now, you may have particular strategies that you're comfortable with, all right? Strategies that maybe you're thinking, I only know a few, I don't know a lot. That's fine. You do not have to know every single one of these strategies in order to be able to trade the markets. You don't, okay? But you do want to be able to maybe identify, should I be a little bit more bullish? Should I be a little bit more bearish? Should I maybe consider some neutral strategies? And as we're talking about these different strategies, some of them are more directional than others, right? So say on a long put, that's very directional down versus a short call vertical, something like that. We expect it maybe to stay down, but we would hope it would drop, but it doesn't have to. If it went and kind of continued sideways here for a little bit, we could still have a positive working trade, meaning working well in our favor. That could happen, okay? Neutral strategies, you might go, I don't know very many of those strategies yet. And that's just fine, all right? An iron condor is simply putting a short call vertical together with a short put vertical. It's basically combining both of those trades. Many times we just put it on at the same time, although it is possible to leg into it if you want. Now, given what we're looking at here, I want you to chat into me. What strategies would you feel most comfortable for us pursuing today? Now, I'm going to give you a moment to answer that. I am going to say I had some trades in mind, and as we pull them up, we might have to change what kind of a trade we're doing on them because some of them might not be faring well here in the last 20 minutes or so. Let's see here. Looks like Cameron's just helping you guys out. Excellent. Let's get rid of our lines. And let's go back to, we're not going to go back to the chart. I'm still going to give you a chance to answer. We are going to answer a couple of questions here. Okay. One of the questions that we had there talks about, when the underlying goes wrong, goes the opposite direction than what you thought it would do. Let's discuss, let's understand and discuss how we might try to fix it, try to salvage it, try to minimize our losses in it. Okay. Now, in this class, we haven't had a lot of opportunities to do that, but I'm going to bring up my playlist for short verticals because the last 3 weeks, that's pretty much what we've been doing. Okay, so let me find where it went to. On our short verticals, usually it's down here a little bit. There we go. So right here, so the fourth one over, and it was a few rows down, is our short verticals playlist. And on that short vertical playlist, you can see here, did trying to fix a broken trade work? Talking about time decay and theta decay here. And then we had this one, joy from trades that don't make a move as expected. Okay, so there are several there that you could go back and reference, even though they weren't necessarily something we taught in our time here today. Okay, so that's the answer to question number 1. Question number 2 is going to come off of this, our Chrome here. And the question somebody had, and I think this is a great question. I bet a lot of you may have this question. It was, is there some sort of a syllabus or something that I could follow as a guide so I know, what things to maybe hit in what order? So I was in our live upcoming webcast calendar. I went over to Getting Started with Stock Investing. That's on Thursdays at really 4 Eastern times when that starts. I take that back. Looks like 5 Eastern time is when that kicks off. And typically Kevin Horner teaches that, but I think he's going to help out with that workshop on Thursday. And so Mike Fairborn is going to teach it. And what I wanted to show to you here was a resource. And it's called, let me get something good to write with here. So right under the presenter's name, which I accidentally just drew through on Mike's name, New Trader Starter Guide. New Trader Starter Guide. Some of you might be going, oh, I didn't know that you had that. It is true, you might not know that we have that, but we do. And as you bring it open, it's a PDF document. You can download it, you can print it. Let's zoom in here a little bit so you can see. So we start out with, okay, here's what you need to know as you're getting started with paper money, right? Thinkorswim platform, okay? Some videos and some basics. And then you can see here, if you want to do a dive deeper, great. Then we have stock trading basics here. All right, so we talk about, there's some different videos here, understanding maybe some of the initial types of trades that you might consider doing out in your paper account. You want to go a little bit deeper dive. Then we've got a course called Stock Trading with Technical Analysis. And I would actually almost say this is more of an intro. Okay, something to go through to just get your bearings with things. And then this might be more applicable to the person that asked this question, Cynthia, because she said, how about options? Is there some sort of something I can follow? Okay, so we've got investing option basics. So we've got a couple of videos. We've got this options for beginners course. All right, as great places to start. And then when you're ready to go a little bit deeper, you can dive deeper with these additional resources here. So I hope that's helpful to you. I hope if you haven't seen that, you're like, perfect, that's what I have been looking for. And now you know where it is. All right. Now I asked you to answer, and some of you did here, what kind of strategies you thought maybe might be most applicable in our market. And so Ron says maybe a bear debit spread. Greg says synthetic short stock, which would be a very bearish position. Elena says, maybe an iron butterfly. Let's go back to our strategies page here. Butterfly's on there. The iron butterfly isn't on there, but another neutral strategy. Aaron says maybe a put credit spread. So put credit spread would be bullish. Sharon says short vertical. And so if maybe you choose. Maybe you have to be a little bit bullish, a little bit bearish if you're going to use a vertical at all there. All right, very good. Well, last week, one of the things we did is we talked about conditional orders and putting an order on there in case the stock didn't do what you were expecting it to do, right? Right now, the market's closed. So who knows what it'll be like in the morning, right? All sorts of news keeps coming out. Things keep changing. We talked about the volatility already. And so when we put on our orders last week, we just said, all right, do not get into the trade unless stock you do this. Okay. Well, let's pull up a couple of these and let me just show you what happened with them. So first one was PLTR. And let's maybe just do, say, a 3-month chart here. And we had class on the 25th, which was this candle here. And we were looking at maybe it bouncing here. We weren't really sure if it would take this. That's a good strong area for support there, about 84. And so we said, only if you go up should you get into the trade. All right. We took a look and went just a little bit higher than the high of that day. And then the next day it didn't go there. So our order didn't fill. Now I only put it on as a day order. I did not put it on as a good till canceled order. Even if I had put it on as a good till canceled order, it still wouldn't have filled yet because of what the market's doing. However, during these pullbacks where it's continuing, if somebody wanted to, they might say, well, maybe if it gets higher than today's high, maybe you're interested. There might be some of you that are like, no, this thing, it was looking like it was going to bounce there and it already had a lower low. Now as a lower high, might not be so convinced that that's the kind of trade you want to do. So the 3 trades we put in, none of them filled. Okay, so the first one was PLTR. And then we had Starbucks, which actually was looking pretty decent for us. I think the day, let's see, this was the 25th. So this is the day we looked at it. Next day, red candle, didn't fill. If we had it good till canceled, it looks like maybe it would have filled, a little bit higher on this day here when it went up. But again, we just did it just for the day. So if it didn't get put through, we weren't going to worry about it. So the third trade that happened on was APP, AppLovin. In a similar story, we were looking at it on the 25th, looking, maybe there's a couple of areas of support here, the moving average, the 30-day, and then that 386-ish area. It dropped down, so we didn't get filled on that either. Now, seeing this in action might give you the idea that maybe that could be helpful for you, especially in our volatile conditions. Even though in less volatile conditions, we don't know what the stock's going to do. But in real volatile conditions, then it is much more likely that it could surprise us. So putting on those conditional entries can really save you. And that was an example of it saving us 3, right? 3 bad trades because we did that. Now, with the volatility in the market, some of you might be inclined to say, well, options are going to be a little bit pricier, right? If we have the VIX up in areas where it is a little bit pricier, okay? Yeah, those premiums should be a little bit juicier when you're a seller. And it also might convince people to say, you better do a vertical in any scenario. I take that back. You better maybe sell some premium, whether it's a vertical or some other trade where you're just using a combinations of legs, buying one, selling another, selling a main one, buying the second one as your hedge leg, some sort of strategy that way because of the priciness of options and the fact that the market's so volatile. So what we're going to do today is we're going to kind of combine that in terms of making sure we're doing a selling strategy. And I have some examples that I lined up. I'm going to see how well they're holding up, okay? The last couple of minutes of the market was not super positive. Let's take a look at our first one. All right, Futu Holdings. At the end of this, you can see it says ADR. That lets us know it's a foreign company. Foreign companies have more risk. If you even want to see, well, what country is this from? I've got Analyze and Fundamentals here. And then we can come down here and see, okay, where are they headquartered? These guys are headquartered in Queensway Admiralty. Now, that's interesting. Okay, and they're in they have services in Hong Kong and internationally. So that's good to know, right? You know what area of the world that they're working in, and then it'll also tell you what financial services they're involved in. Okay. On this, oops, let's get rid of that. Let's go back to our chart here. You know, what are we seeing here on this stock? More than anything, probably a little bit of a bounce. Now, when I started planning out these trades, we had a hammer candle on the SPX, which indicated potential reversal. Not seeing that now, okay? So maybe not quite as bullish of a case as maybe what we could have seen a little bit earlier, okay? But we'll go ahead and follow through with the idea that we're going to put on a conditional order, meaning we're going to say, stock, you've got to go up to X price or don't fill me, okay? We are not interested. So today's high on this one looks like 111.36. All right. And so we might say, all right, go above 111.36 before entering me into a trade. Now, as we come up here and we look at the trade tab here, this one has some weeklies. It's pretty liquid here, traded over 2.5 million shares here today. And so we've got some weeklies as well as the regular monthlies. Just looking at Ron's note in here, Ron says, you know, when demonstrating the option strategy, it would be helpful to visualize it in the risk analyzer, basically risk profile. We can do that today, Ron, and that actually will answer one of our questions too, because it's about the risk profile. All right. On here, generally, if you're looking with some different options to trade, you want to use the weeklies, you've got to make sure that there's a lot of open interest. Okay. Here is our open interest contracts. Ooh, 30 days out, there's not a lot, whether we wanted to be, you know, depending on what kind of a spread we wanted to put on here. So that means, well, probably might need to go to the April contracts, or if you want to be really short term and have kind of a trade idea in mind, which is what we had here, then let's take a look here at one thing. Initially on this one, we may have to switch this trade out for what I was looking at. We were looking to do 105, 110, long call vertical. So selling a whole bunch of that premium so that we have a spread value that's a lot less, okay, takes our net debit down. But the price of the stock right now in relationship to where we need it to go, we've got 110 here. And so it's already sitting at 108. So it's part of the way there, but we would need it to move not quite $2, but close. Okay, we've got 18 cents there to work with. That's where we would need this trade to go. Now, with the idea in mind that maybe let's put some targets on these trades today, knowing that the market may just swing in a direction 1 or 2 days and then flip and do the opposite. Okay, so on this trade, what we're going to do, let's see here. Write down the number of the high today, 111.36. And if 111.36, you know, a potential target really could be up here in this 130 area. So we're going to put our target at around 138. Now, some of you might say, well, maybe we should do, not 38, 130. Okay. Some of you might think, well, maybe 128 maybe is a little bit safer. We could do that as well. Okay. We could go 128. Okay. That's going to be our target. Let's go ahead. Let's put it in and put in the conditional order that we don't want to get in till the price of the stock goes above 111 and 36 cents. So we'll go 111, let's say 40. Okay, 111.40. So 4 whole cents above. All right, let's go ahead. We don't know exactly what the price of the option spread is going to be at that point. We can try to guess. We can play with the calculator and the Theo price calculator, I should say. We could play with that. But let's do what Ron suggests here and take a look at this on the risk profile. And we've got FO2. And let's try this again. Analyze trade. Oh, I know what's wrong. We need to kind of adjust. I think this is what's wrong. We need to adjust it here. And let's not hide simulations anymore. I'll hide real positions. There we go. That's more like it. If you're a visual person and this makes sense to you, great. There may be some of you that have no idea what we're even looking at, what it represents. So let's just do a quick one over, okay? On the risk profile, the area to the left here is kind of our gains and losses, okay, with our break-even point being right here on the 0 line. Down here at the bottom is if the price of the stock, you know, wherever it corresponds to, say 110, you go straight up, and that would be like our profit and loss as of this date, which is actually yesterday. We can play with that. Or if you go straight up, the turquoise looking line here is your profit and loss at options expiration. Okay, that's kind of how you read it. Down here in the corner, it'll give you an exact value for the line that you're trying to get an assessment of. Okay, so the turquoise line and that kind of purplish line will do that for you. Let's go ahead and clean this up. All right, so that may be helpful to run. Now up here we want to put the expiration date. We actually want this Saturday after the expiration. Let's get rid of the red marker. Let's try this again. So we're going to put that at the 22nd. And, you know, we may even choose to kind of bring this in a little bit here. And so as the price of the stock goes higher and higher, that's nice, but our gain is going to be fixed. All right, our max theoretical gain here would be difference in the strike prices, so $5 minus whatever our net debit is. Okay, right now it's showing at 233, but we're going to make it conditional upon going over. So some people, this really is helpful to them to see a visual. While we're here, I did want to, let's finish the trade and then we'll come back here. Let's do that instead. So let's go ahead, let's put it in how we would want it to look. I'm going to imagine we might be risking maybe something like, not positive here, but maybe $2.60, $2.80 to gain that minus, say it was 270, or say it cost us 260. Okay, then we would have to gain about 240 in the trade. Okay, $2.40 per contract. Of course, we multiply that by 100. We're going to do 3 contracts here and stay within our position sizing rules. In fact, because of higher volatility, some people may say, you know, I typically might risk $1,500 per trade. However, in this scenario, because the market's so volatile, maybe you don't even want to risk that much. Maybe you lower your threshold a little bit in terms of how many contracts you decide to get into. All right. Now, Sharon's letting us know earnings on March 13th. So March 13th is next Thursday. One thing you could say is, hey, I want to be done by next Wednesday. I want to be out. let's see what time of the day they announce. They announce before the market opens. So yeah, on the 12th, you don't want to hold over earnings. Yeah, you'd want to be out by then. But sometimes with these big moves we're having in the market, sometimes this could either hit our stop really quickly or our target really quickly. Okay. And so we're going to keep that in mind. We will be seeing this trade or a follow-up on this trade before they have earnings, so we'll be able to talk through that. All right. So since we don't know exactly what it's going to cost us here, we're going to put it as a market order. We're going to put this good till canceled. And we are going to come over. Actually, we're not going to do a market here. We are going to have to do a buy stop here. And on our buy stop, we're going to have to make it conditional. Let's think how this could work the best. Let's go to the gear. When we click on the gear, should bring up our order conditions. There it goes. We can say we don't want to get in unless FUTU goes greater than or equal to, I think that's the right way. We'll check it out and see. We said 111.4. We've got that in there. So 111.40. And then we're going to say, in this case, because it's a spread, we're just going to let the conditions do that for us. So we'll go back to market order. Whatever it is at that point in time, we want to get filled. Okay. I was guessing what it might run, but we honestly don't know, right? So if the price of the stock gets there, go ahead, execute our order here for market. And we're going to put a good till canceled. It could happen tomorrow. It could happen the next day. It might happen never. Okay, we just don't know when that's going to be. So we'll keep that at good till canceled. And then let's make sure I've got my greater than the correct way. So greater than or equal to 111.40. All right. Any questions on this before I hit save and submit? And this one's going to be going to our option strategies grouping so we can see the trades together that we're doing in this class. Before we get out, let's put our target in here and our stop. Let's do a first triggers OCO. We're going to create two opposite orders here. One of the orders, we're going to have it be our target as a target up. And the other one, we're going to put in as a get us out of the trade. It's not working out so well. Okay. So this first one, we'll have to do it as a market order because we don't know what the price of the stock would be if it were to hit its target. So our first one, we're going to say, get out if the stock, not the option price, but the stock price gets to greater than or equal to its target at 128. All right, 128 even. That's where that horizontal resistance was. Okay, we're going to do it based on it hitting a place on the chart as opposed to a percentage of the profits or the percentage of a loss, because that's typically what we have done a lot in this class. And so this is a totally different way to think of it in terms of a swing trade, but aiming for a target. And so we'll leave that there on that side. And then for our loss, we could do a couple of things. We could go back to our chart and say, you know, if the stock here does not rally up, say we're in for another bearish day. So maybe we don't get filled, but we want to have at least an initial exit on this. We might do something like give it enough wiggle room, maybe that it could maybe go down to the low and rally up again. But if it goes lower than today's low, then we're going to say we want to be out. So the low today was 101.54. So let's make our stop loss be based on that. So as we go back to our trade, now we're going to fill in this bottom one. Again, it's going to be a market order because we don't necessarily know the price of the options at that point, but it is really fairly liquid, right? We're seeing a lot decent number of contracts out here. And then we're going to say if it gets less than or equal to lower than today's low of 101.54. Got an extra one and that we don't need. 101.54. All right. We'll make sure that it's saying that as well, that we want the security to be less than or equal to 101.54. I'm going to move this up. We're going to hit save. And I'm just going to double check that number, that was the low. Let's give it a little leeway. 101.54 was the low. Let's go ahead and put in our stop for like 4 cents lower. Okay, we'll just put it right on the 50 cents exactly, just to give it a little bit more leeway. All right, we'll put that 111.50. Sorry, my fingers are kind of doing their own thing. There we go, 101.50. That's going to be, a few bucks down from the 108 where it closed today. All right, let's bring this up. Let's hit save. And we're going to send this whole thing. Oh my goodness, we didn't really want to do that. We just wanted to confirm and send. And then this is letting us know, sometimes there's wide markets, sometimes there's liquidity issues, sometimes they have to substitute our order. They're letting us know that in advance. That's great. We would like them to do that for us. All right. One of the other questions asked had to do with the risk profile. And can you use the risk profile to kind of give yourself an updated scenario on your trade? The answer is yes. Many times we'll just look at it at the beginning of the trade, but yes, day by day, you can go in there and take a look at it. So one of the trades, it's not from our class, okay, but one of the trades we have going on in our short verticals class is this DEC trade. It's a 150-150 call spread. And we received about 89 cents for it, and it's getting down to about, not quite half the value, but it's getting close, right? We collected that amount. We'd love for it to go down to be a smaller number, which I'm sure we've got put in here. But let's just look at an update. It has 10 days to go. And so what you would do is you would just come over here. You'd type in the ticker symbol for the stock. So we'll go ahead and put in DECK. Then it brings Decker up. Then it brings up our trade. And this is not the right trade here. Let's get rid of this one. This might be an old one sitting out there. And we'll say hide simulations. There we go. There's our 5 contracts, 150, 155. And then what you might want to do is just make sure the date up here is the Saturday after the options expiration. So that'll be on the 22nd. And then you can see an update of your trade here. Usually I'll come in here and say set slices to the break-even point on that expiration day. So it gives you a line here of what your break-even point is. And then same thing here, profits on this one are going to come in as the price of the stock gets lower and lower. In fact, it hits its max gain up there at the short leg, which is 150. Okay, but if it drops to 140, 130, great, but our max gain is going to be fixed there. So anytime you do want to update yourself on what's going on in your portfolio, absolutely, you can do it trade by trade. Something in the advanced options that we get into is the whole entire portfolio. Now I want to make sure we get one more trade on here. Let's take a look real quick, see how this one ended up as far as looking charts. All right, this is one that doesn't know we had a pullback in the market. Okay, Verona Pharmaceuticals. It is a foreign company as well, so be aware of that. You might go and see what country they're from. And you can see it's been trading really strongly in this nice channel. What's it doing today? Well, it looks like it's bouncing off the bottom end of that channel. So what we're going to do here, we're going to do a similar thing. We're going to say that we are going to have a target on it. And the initial target that I was looking for here was about 75.50, which is, you know, if it kind of took some time and whittled around, would be getting it up here to the top edge of the channel. Okay, so that was about 75.50. So we are going to do this as a trade. We're going to put a target on it using the price of the stock again versus the prices of the option. So we come in here on this one, we're going to use the March 21 options as well. We're really kind of at a shorter time frame for that, so it is a little bit aggressive. Many times we'll work with 20 to 40 days worth of time or 20 to 50 days worth of time. So it's definitely a little bit out of that typical window that many people might like to use. And let's see if these strikes still look good here. I was looking at doing, oh, this is perfect actually. Do let's buy a long vertical. And it's kind of right almost in the middle here, which is always helpful. Okay, so we're going to risk 253 to make basically 247. Okay, because it's a $5 wide spread here. We're going to put a target on this. So let's go ahead. We're going to do 3 contracts. We're going to do a first triggers OCO. We're going to create 2 opposite orders, and we're going to put this on fairly quick in the interest of time. Got a couple of opposite orders. The first one, let's use as our target. Okay. We're not going to know what the price is going to be here, so we're going to make that a market order. We're going to make that a market order. We're going to make both of them good till canceled, and neither of those orders will take effect if we don't get filled tomorrow. If we don't get filled, then the whole thing is going to cancel out. So we're going to leave this as a day order. So on this first one, let's go ahead and give it that price target up at the top of that channel if it were to run that way for us. And that would put it at a value of 75.50. All right, we'll make sure it gets to security is less than or equal than. I got to change this direction. There we go, greater than or equal to. And then we'll put in our order here. Now, let's go ahead and use a little bit lower than today's low. Today's low is 63.70. Let's go 63.50. All right, for that second part of the order. The stock happens to go there, then maybe it's not following through in that case. And we're going to make sure it's less than or equal to 63.50. All right, we've got our order saved. We're going to put that in our options strategies bucket. We're going to watch them. Maybe they will have completed by the time we get together again next week. Maybe not. I'll watch them tomorrow and make sure that they did get filled. Just making sure if I have to make any adjustments on it, then I will. All right. Well, you guys, our time is up. I appreciate you being here today. Appreciate Cameron being here. You didn't take it too hard on him, so that's good. Sometimes we have some really busy sessions and sometimes we don't. But do appreciate you being here. It looks like Cameron's pasted our playlist for this class for the option strategies. And then I showed you a little bit earlier where you could go find if you're looking for, man, what happens if you have to swap out a trade, things aren't going right, and you're reverting to what do we need to do, those ones as well. Now, coming up next is, I almost forgot who's coming up next. I think I'm the last one today. We are going to be coming up next. Will be tomorrow morning, right at the opening bell. We'll be doing Trader Talks. Kevin Horner will be there leading that discussion. So for you guys, I would say any new strategies, if this was a newer strategy for you, practice in your paper money, practice doing that conditional entry, practice putting in targets and stops so that you can let automation just take care of things for you versus you trying to run and try to catch it. Okay, everyone, have a great evening. We'll see you back here tomorrow morning. Bye-bye.